You're watching CNBC TV18 and the show is called Business Lunch. I'm Nisha Podar and with me is the co-anchor Sonal Bothra. So Sonal, markets have started on a weaker note today. In fact, if we really take a look at Nifty 50 at 17,750 odd levels, it is about 130 points lower than the high point of the trading session today for Nifty 50. So right now, almost 0.6% down. But underperforming are the bank Nifty with falling with more gusto than the key indices, 0.75% down. And it's the mid-cap universe taking the full brunt, 1.5% down in trade. So no surprises then as far as market breadth is concerned. Because of the broader markets being weak, the advanced decline ratio heavily in favor of the declines. But still, there are a few counters which are on a contra call. ITC, no surprises there, is on the winning side today. Along with that, some of the other biggies like the steel counters as well as Bharti Airtel and Titan shining in trade today at the moment, Sonal.
Yes, so these are a couple of contra bets, as so to say. But if we look at what is actually leading to this big decline, it's Infosys, which is seeing which is contributing around 33 points in terms of cuts to the Nifty. This is followed by TCS. We have SBI and Reliance Industries. So these are the big four names which are contributing 73 points to the Nifty fall that we are seeing right now. And Adani Enterprises, the other one, 10 points to the Nifty fall that we are seeing today. So of course, Adani Group that continues to be in focus. They've taken a beating yet again. So let's get in my colleague Vivek, who is joining in with the latest developments here. Vivek?
Well, absolutely right. So the group stocks continue to remain in focus. So first on our list, some of the stocks have actually been removed from the additional surveillance measures that they had been placed in, thereby indicating that they now require less upfront margin payment. So Adani Ports and Ambuja Cements have moved out of the ASM framework. However, Adani Enterprises continue to remain part of the framework. Also, when you're talking about rating agencies, Moody's, what they've actually done is, while they've maintained, their rating on the Adani Group entities, for 4 of the group entities where they actually have a rating, they've gone ahead and cut the outlook to a negative from a stable stance that they have earlier. So Adani Green Energy, Adani Transmission, Adani Electricity are a few of the names where they have gone ahead and trimmed their outlook. When you're talking about Adani Group stocks, there's also been some further pledging activity that the group has given. So they have gone ahead and pledged further additional shares, and this is in favor of SBI Cap Trustee. And 3 stocks are the ones that are impacted. So Adani Ports, the pledge has gone up to SBI Trustee from 0.65% to 1%. Adani Transmission as well as Adani Green have seen some upping as far as the pledges are concerned. So we had SBI and they spoke to us exclusively where they said that this particular topping up of the pledge was on account of the loan that or the facility that SBI had given to Adani for the Carmichael mine project. So they said it's not a fresh loan. The asset continues to remain operational and it continues to generate cash, and they did not sound unduly worried. Lastly, some more development expected today as well. The Supreme Court has directed SEBI to submit a report today on the status of existing framework for shocks to share prices, as has been seen in the sharp volatility that has been seen in the Adani Group stocks. So let's listen into the SBI management talking to us exclusively on their exposure to the Adani Group stocks.
We have an exposure of US dollar 300 million facility that was granted for the Adani Group's Carmichael facility in Australia, of which they have drawn down USD 180 million towards the railroad part of the project, while the mines they have so far managed to complete with their own resources. So there is one of the covenants for this facility is that they should maintain 140% collateral coverage. In addition to the project assets, they are required to maintain this collateral coverage by way of pledge of shares from the 3 companies belonging to the group. This is not any loans that was granted against pledge of shares. No additional finance was granted against this additional pledge. These are essentially to maintain a covenant that is pre-existing in terms of an earlier facility, which is completely covered both by project assets as well as this collateral coverage. The response is no, they haven't approached us. There have been no discussions, as I mentioned, in terms of any additional finance that they may require or a refinance that may require. So it will be difficult for me to respond at this point in time as to whether what could be our response. So if and when a proposal of that nature comes up, I'm sure that we will have time to discuss that with the company and take a view in that matter.
All right, so that was the latest coming in on Adani Group of stocks, their risk coverage, and also a large lender giving their perspective on the pledged shares. Moving on then, let's focus on the auto space, and Mahindra is on our radar now with an important corporate voice. Remember, the company had reported a operationally strong third quarter numbers, and the company's revenue grew by 41%, and the margin is also on a steady uptick. Let's hear out what the management had to say. Anish Shah, the MD and CEO of Mahindra and Mahindra, he says that the auto margin is set to rise further.
We have taken our capacity up about 55 to 60%. We will take it up another 40% in the next 12 months, effectively doubling the capacity in the auto business. A booking backlog today is 266,000 vehicles, and the wait times are much longer than what we'd like. But with the capacity increase, we should be able to get those wait times down. So in all, we feel very strong about where we are right now. The XUV400 has seen over 15,000 bookings already in a very short time period. And therefore, over the next couple of years, we continue to be very positive. The next big growth area for us is international. So on the auto side, we've seen OPM go up 320 basis points. We made a commitment for a 300 basis point increase about a year ago, and we had said it would happen in the medium term. It's happened faster than we expected. We will see more upside in auto margins, both with regard to the operational leverage we will get from higher volumes, as well as what we are seeing on the commodity side right now. In farm, we've actually seen a very strong performance overall, not just in the industry, but our business as well, because we've grown market share 140 basis points. So we will put in more investments there that will have some impact on margins as well.
All right, that's the word coming in from M&M. Strong set of numbers there. But let's talk about some more stocks which are in focus. ABB India is on our radar on the back of its third quarter numbers. The company's revenue grew 15% to 2,427 crore rupees, while profits rose 62%. EBIT margin also improved to 15% versus 8.8%. That is EBITDA margin in the same quarter last year. My colleague Shivani Bazar spoke to the country head and MD of the company on the quarterly performance and the outlook going forward as well. Listen in.
Indian economy is doing well, and also we are very well positioned with our product portfolio, which is represented by about 20 divisions we have, including service.
What will be the company's focus area of investment this year, and how much of it will be positively impacted by government's capex push?
Well, government budgets as well as government policies over the last few years, it has a positive impact for the domestic demand, and also making sure that we are able to participate in a good way. Also, it is causing that our supplier base, which used to be less capable in terms of delivering domestic product, and it limited our localization. But we find now the domestic supply base is becoming sophisticated, and we are able to localize even more. So our focus will be definitely on more and more localization of our global technologies so that we can serve the domestic market. Also, the new market segments which are growing, we will invest more in them to serve more customers. And also we'll be investing in geographical expansion. And as our capacity utilization is increasing, we continue to make our incremental investment on the organic side. We are a debt-free company. We have good cash on our balance sheet, good land bank. So as the demand grows, we will organically grow, of course. But we also have ambitions to have inorganic growth.
You also mentioned that the company ABB India has seen a reduction of 81% in greenhouse gas emission. Can you also elaborate a little bit on that? How did you achieve it?
You're right. We have 82% GHG reduction. So for last few years, we are focused on the ESG and the environmental aspect of it. We have a very well-structured program, and we believe it's the right thing to do in a country wherein energy efficiency and energy utilization should be focused.
All right, after that corporate voice on Business Lunch, let's slip into a short breather on the show. But when we return, we get you a report from the 14th edition of the Aero India underway in Bengaluru. Stay tuned for that.
Welcome back. You're watching Business Lunch on CNBC TV18. Let's talk about another important story now. Prime Minister Narendra Modi inaugurated the 14th edition of Aero India, which is Asia's largest aero show, in Bengaluru today. The theme of Aero India 2023 is the runway to a billion opportunities. The 5-day event includes aero displays by aircraft and helicopters, along with a large exhibition and trade fair of aerospace and defense companies. In fact, my colleague Ritu Singh is at the event and gets us this report on all the buzz from the ground. Ritu, what are you picking up?
Prime Minister Narendra Modi today inaugurated the 14th edition of the Aero India 2023 here in Bengaluru. It is a 5-day event where 809 companies are expected to participate to showcase India's defense and aerospace capabilities. 32 defense ministries and 73 CEOs, both Indian and global, in the defense and aerospace sector are likely to participate in this 5-day long event. 251 memorandums of understanding worth about 75,000 crores will be inked during this 5-day event. We're also given to understand, of course, the idea is to showcase the capability of India to make in India and make for the world. The theme for this year's Aero India show, of course, is the runway to a billion opportunities. And that is precisely what Prime Minister Narendra Modi alluded to in his opening speech while inaugurating the event, inviting the private sector to come here and make investments, and also reiterating that the current defense exports, which are about $1.5 billion, are expected to go up all the way to $5 billion in the next few years.
2021-22 में हमने अब तक के रिकॉर्ड 1.5 बिलियन डॉलर से ज्यादा के एक्सपोर्ट को, उस आंकड़ों को हमने पार कर लिया है। हम इसे अभी केवल एक शुरुआत मानते हैं। हमारा लक्ष्य है कि 2024-25 तक हम एक्सपोर्ट के इस आंकड़े को 1.5 बिलियन से बढ़ाकर 5 बिलियन डॉलर तक ले जाएंगे। आज मैं भारत के प्राइवेट सेक्टर से आह्वान करूंगा कि ज्यादा से ज्यादा भारत के डिफेंस सेक्टर में इन्वेस्ट करें। भारत में डिफेंस सेक्टर में आपका हर इन्वेस्टमेंट भारत के अलावा दुनिया के अनेक देशों में एक प्रकार से आपका व्यापार कारोबार के नए रास्ते बनाएगा। नई संभावनाएं, नए अवसर सामने हैं। भारत का प्राइवेट सेक्टर को इस समय को जाने नहीं देना चाहिए।